Hi, good morning. Nice to have you here. This is R.N. Bhaskar from BKBB, an acronym for Bhaskar Ki Business Baatein. This is a channel that brings to you policy analysis, conversations, and an occasional business story. But right now, at 8:15 in the morning, we come to you with news behind the news. We look at headlines, which we think are important, and analyze what could have happened before, after, behind those news. And today I have my co-anchors. I have Katya. Katya, welcome.
Yes.
And I have Anurag. Anurag, welcome. Glad to have both of you here. And the three titles that we shall be discussing today are given you on a screen. The first is how Brazil and China have signed a deal for a feasibility study for building a 4,500 kilometer railway line. That could be very significant. The second is banks have lots of money, but they have not been able to give money to others. And linked to that story is a third one: private capital, private credit appears to be getting more attractive. Let's look at the three. Okay, we'll start with the first. Before I begin, just a reminder. Please click the subscribe button if you're not a subscriber already. And do click the like button, it helps us. But most of all, it's an appeal. Please tell your friends about us. It helps us get a better algorithm with YouTube. And let's come to the story. In a major, what would you call a major geopolitical move, Brazil and China signed a deal to build a 4,500 kilometer railway line. At the same time, Brazil also signed another deal with India for increasing trade with India. Brazil, which is a large country and an outlier and does not really like to be bullied by the US, these two moves become very, very, very significant because of the implications. To understand this deal, you must understand a previous deal that China signed of building a railway line from the east side of the South American continent to the west side of South American continent, and Colombia was spearheading the deal. When Trump came to power, he ordered Colombia to scuttle all deals with China. And Colombia, which is vulnerable and needs funds all the time, decided to go slow on the deal. Meanwhile, Brazil stepped in. And Brazil's state-owned company called Infra SA signed a deal with China Railway Economic and Planning Research Institute for a feasibility study for building 4,500 kilometers of railway line from Iquitos in the north to Rio Branco, and then going over to the Andes towards the Peruvian coast. In other words, it is from one coast on the eastern side of South America to the western side of South America in Peru. It's a port-to-port linkage and a railway line. And you can be sure that this will be used for ferrying cargo across from one side to the other, though that is not mentioned in any of the newspapers that talked about this deal. Effectively, China has created another deal which could be a replica, a copy of the Suez Canal, which has not been very effective lately. This could mean geopolitics of a very high order. Again, Brazil's deal with India seems to suggest that Brazil wants to do trade with countries beyond America and not depend on American trade significantly. This will allow it to insure itself against any tariff imposition by America. Brazil is a very interesting player. Globally, whenever there's a big dispute, most of the legal drafting is done by Brazil. And other countries then champion the cause. This is an interesting project. Keep watching what happens. And that takes me to the second story, which is Anurag's story. Anurag, could you come in?
Good morning.
Today, India's banking sector stands at a very curious crossroads. Banks are awash with liquidity, surplus funds have surged to high records, and short term lending rates have dipped so low that they barely cover banks' own costs. Yet, despite a series of sharp interest rate cuts by RBI, credit growth remains stubbornly in single digits, far below last year's double digit pace. What's holding the banks back? A closer look reveals that abundant liquidity, while headline grabbing, is not the magic bullet for credit growth. According to a recent JP Morgan analysis, the RBI's surplus funds mainly influence overnight market rates, not the broader lending or deposit growth that powers real economic activity. In other words, a more cash in the system doesn't automatically mean more loans for businesses and households. Another layer to it, the finance minister Nirmala Sitharaman has urged NBFCs to avoid aggressive loan marketing and to keep interest rates reasonable. She emphasized that financial inclusion should not be a pretext or exploitation and called for lending to be based on genuine need and repayment capacity, not just growth for growth's sake. So, for the meanwhile, the liquidity tide is high. India's lenders are choosing prudence over exuberance. The answer lies in sentiments and risks, as both corporates and consumers are cautious in an uncertain economic climate. What's your take on this, sir?
Anurag, it's a very important story for the simple reason that the government is now facing the consequences of setting the CBI after bankers. Remember, bankers are individuals, and many of these bankers were compelled to take loans from give loans to powerful people. And when they defaulted, the government kept quiet, but the CBI started making cases against them. And these bankers, who are individuals, especially after they retire, don't even know how to fight a case. Bankers have naturally preferred prudence. So even everyone wants to borrow money from banks, many of the bankers say, no, let's get the documentation. So they are going slow. But yes, you have money, you have takers, but caution prevails, which is understandable given the past record of failed creditors and penalized bankers. Anyway, we go to the third story, which is linked to the second story, and that is Katya. Katya, could we have you?
Yes, sir. So, so while corporate loans have not been picking up for banks, corporates themselves are not short of ways to raise money, and one of them is private credit and bond issuances. Yesterday, there was a very interesting bond news. Adani Enterprises raised 1,000 crores in the bond market, and very importantly, it was fully subscribed in just 3 hours. That shows, and it's not one of those regular private placement of bonds. This was a public issue of bonds, and it was successful. It shows that the bond market is now buzzing, not as much as IPO market, but it's still buzzing. So why the question? And private credit has also been picking up. We have seen large $3.5 billion of Shapoji Palonji going to private credit as opposed to going to traditional routes, because these are all named companies going to private credit. We have Biocon Biologics go for it. We have Manipal also go for private credit. So they are choosing unconventional routes. So we had asked a couple of people as to why they're choosing, because private credit is expensive. Bond is also, you have the issuance cost, etc. So it is a tad more expensive. They said it's just that in interest rates have been cut, the transmission is much faster from the bond market side, from bond buyers, as opposed to banks. Banks have very lazy transmission schedules. So that is also one of the reasons. Then on the other hand, SBI has also complained that a lot of people are prepaying. A lot of people raised money from the IPO and prepaid a lot of loans, which has actually truncated their loan book. And this is a very interesting move, especially when especially when retail loans are actually coming down because of RBI's checks and balances that were put in 2 years back. So this is a very interesting time. Also, sir, just from the other side, there are a lot of AIFs also in the market who are ready to subscribe to these bonds. Is also why this market is buzzing. Isn't this an interesting move?
Yeah, absolutely right. Very interesting. And this points to one more thing, and that is people go to bonds because there's not too many the people behind the bond market, the financiers, take
Right.
a business point of view and are ready to take more risks than banks are willing to take.
Of course.
And the banks, because of the past history, will not lend easily till all the paperwork is done, all the I's have been dotted, and they'll ask promoters too many questions. The promoter wants money to do something, which is why foreign banks give money more easily, and private financiers give money more easily because they understand risk and are ready to give the money without too many questions being asked because they know the person. And that is where banks lose out, especially the nationalized banks. But yes, good story, great story, and it shows how promoters and financial markets work differently for different segments.
True.
Anyway, that brings us to the end of today's discussion. And let me go to the questions first. The first question is, do you think America will now start pushing Brazil the way it did Colombia? Yes, America's got a habit of pushing. It will try. But Brazil is a little more resilient than Colombia is. Colombia needs money. Colombia needs bailouts. Colombia needs a lot of assistance to manage its own economy. And the pressure that America can bring on Colombia is a lot greater than the pressure it can bring on Brazil. Let's see. And the second question is on the financial markets. Uh, So, what do you think will happen to banks if they can't get enough borrowers? Katya, would you like to answer that?
So banks have to become a lot more agile. While, like sir said, corporate loans have become a huge burden on their books for so long, and government had to come back and capitalize them. So a lot they have a history and baggage with regards to corporate loans, but they have to become a lot more agile. And like you said, private credit and bond markets are faster, so at least, if not anything, transmission of interest rate advantages should be much faster. So because it's been cut a while back, bond market is reflecting it, private credit is reflecting it, bank should also reflect it faster, and it is only fair for borrowers to get the best interest rates. So this is all what banks can do.
In fact, there's another question which I'll come back to you. Let me give the first part and answer the second part you can give. And the question is the government discouraging growth by scuttling loans? Uh, the banks are busy harassing corporates with KYC and RKYC. There are two aspects to it. One, banks have given a haircut on many loans. And some of the loan haircuts go up to even 60, 70, 80%. In fact, what is interesting is SBI refuses to divulge the names of where haircuts have been over 65%, 67%. Why? I do not know. I guess it will be too awkward because the players who've been given such large haircuts could be people who are very close to the government. But what do you think, Katya, is happening?
uh, it's a lot of the loan growth, credit growth we've seen is mostly from the retail side, sir.
Ah,
So there is only one side of the system growing, and corporate loans are cheaper because they're large chunky loans which are given in. Retail loans are costlier, and with app commissions etc added in, it will become much costlier for banks. In fact, Uday Kotak has said the home loans themselves are not yielding the interest rate that they should. He had famously said that. So I think there is something about their own cost structures that they should look at, and also they should gain from the liquidity in the market, they should pass it on, so so
yes, I agree.
and they should do more to attract cheaper deposits as well. So that is something they are been unable to do, so because of trust factor or lord knows what. So
Yes. In fact, there's one more question. I'll try to answer it briefly. Why is India not bidding for large projects overseas? It depends on financial ability and political ability because we've reached the end of our time limit. So let me finish it now. Thank you very much for being with us. Just the usual reminder, please tell your friends about us. And do click the like button if you like this program. It helps us. And see you tomorrow. Have a great day today for the rest of the time that you are, wherever you are. Good luck.